Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Parm Sangha. He's the Global Blockchain Lead for Trade Finance and GBS Executive Partner at IBM to discuss how blockchain is helping to support international trade. Parm, thanks for joining us. Welcome to Trade Talks.
Thank you, Jill, and good to meet you. Thank you for having us.
Tell us about WeTrade and the collaboration with IBM and what types of solution it provides.
Yes, so effectively, WeTrade is a cloud blockchain-based service from IBM, and it's a platform that allows effectively buyers and sellers to find each other, connect, and create terms and conditions by which they want to trade. And on that platform, they also have the option to access affordable financial solutions for working capital. They're more affordable on the WeTrade platform is because they're codifying the terms using smart contracts, which are in blockchain. And we're hearing that some of the clients are getting a 60 to 80% reduction in the cost of processing those transactions on the platform. So the SMEs, which is what it's primarily for at the moment, but it's expanding out to the larger corporates, are onboarded by the banks who actually connect to WeTrade as a platform. Platform was created by 12 of Europe's largest banks, which include HSBC, Santander, CaixaBank, Deutsche Bank, KBC, Rabobank. I should mention them all: Nordea, UBS, and also UniCredit, as well as a Societe Generale. So they all came together to address a market segment need. IBM's role, effectively, it was to come in as the co-collaborator and also now a shareholder of WeTrade to actually bring its expertise in blockchain technology, its ability of developing to the trade finance workflow, and most importantly, is the ability to deploy a hybrid cloud-based platform service in highly regulated industries.
Are you seeing more companies move to a digitized solution?
We're seeing two things, Jill. First of all, we're seeing digitization is happening anyway with regards to trade and trade finance. So, for example, the World Economic Forum actually captured the results which said that the lower the cost of trading, then the higher the likelihood of trade increasing and therefore leading to GDP growth. And we're seeing that the World Trade Organization, as well as facilitating the quotas and tariff conversations that happen on the cost of trade, they're also in 2017 launched the Trade Facilitation Agreement, which was there to digitize the middle and back office functions. And that's also been endorsed by the International Chambers of Commerce with their digital trade roadmaps to also facilitate the digitization efforts to keep costs down so trade goes up. Things have been going well. However, we have seen with COVID is that the pressures within the supply chain means that the digitization needs to go faster. And the second thing that we've seen with digitization is as a direct result of COVID, with containers stuck in ports and not moving through the system, is that the movement of data through the digitization processes now really has to happen with greater transparency and trust, such that those processes in the supply chain can actually be accelerated.
Why is improving access to trade finance critical to the economic recovery overall?
So most governments are all in pursuit of GDP growth. And they all recognize that the market segment that needs most support is a small medium enterprise because according to the OECD countries, 90% of the companies in those areas are small medium enterprises. And they account for something like 60% of the employment as well as the economic value being contributed. However, those small medium enterprises are also encountering a 40 to 50% rejection rate on accessing working capital solutions. So by investing in trade finance platforms that offer more affordable solutions, it gives those SMEs a chance to actually then grow their business, which then has a contribution to the growth of the economy.
And Parm, to wrap up, what are the motivating factors for organizations to join an existing blockchain?
So blockchain, again, on joining, two fronts. The first is if we do take a trade finance type platform like WeTrade, that really is capturing one slice of the workflow that occurs between a buyer and a seller. It's one use case, it's one platform service. And so the motivation for banks to join a trade finance platform is that you're then joining other banks who are bringing their SMEs, which means that there's a greater chance for the banks to offer more financial solutions, which grows their revenues and fee income. But at the same time, it allows the SMEs to find more trusted parties with whom they can do business where there's lower risk because they've been being onboarded in a trustful way. So that's the first motivation in as far as joining and existing. The second is when you do look at the end-to-end workflow of trade. Trade finance is one. There are other networks that have already been built. So for example, tradE, which looks after the movement of digital documents, or IBM Food Trust, for example, which looks at the provenance of produce moving through the supply chain. There's a motivation for those networks to start to connect to each other so you get more of the workflow connected, because the motivation there is not only does it make you more efficient and more competitive to grow your slice of the pie, but through what we call the network effect, it actually goes towards creating a larger pie as well.
All right, Parm, thank you so much for joining us on Trade Talks.
Thank you very much, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.